The bill has been certified as urgent by President Duterte and was among the COVID-19 response measures being pushed by the Bangko Sentral. One measure that's also seen to become a law by end 2020 is the Create Bill, which the DOF says will cost the government as much as 250 billion pesos in foregone revenues in the next 2 years. This estimate is 70% higher than the previous forecast of 145 billion pesos in combined foregone revenues in 2021 and 2022. This is mainly due to a provision by the Senate version for an outright reduction of corporate income taxes for small businesses to 20% from the current 30%, which will be applied retroactively to July 2020. All right, and economists are saying, that the peso may strengthen on the progress of these stimulus bills. Give us a health check on our local unit.
All right, so we haven't had a look at the peso in a few days, Jess, but take a look at that. We are really basically at 48 to the greenback now, so 48.068. This is the strongest that we've seen in more than 4 years, actually, and we've just been on the strengthening path here. And this, according to Mike Ricafort, exactly as you mentioned, because of these stimulus bills, baka naman they will now finally be approved by December 19 before we all go on holiday. And apart from those two stimulus bills that you had already mentioned, there's also the 2021 budget, which is of course still pending, and they have said this was from both chambers. They assured last week that the ratification, and that's 4.5 trillion pesos, can also happen this week now, so maybe ahead of even those two other bills. And that of course is on the back of hoping that the government can not have a repeat of what we saw the year prior, wherein we were operating on a reenacted spending plan, and we do need a bigger budget because of the fact that we need to spend more on the impact of the coronavirus pandemic and on recovery. So you can see on my terminal here how the peso has actually strengthened even week on week. And another thing that Carlos Asuncion from Union Bank is saying that might also strengthen the peso, we are going to be receiving data from on international trade, and that might be providing a lift to the peso. That data comes out on Thursday, that's December 10. Now let's take a step back and take a quick peek at how equities are opening, at least on the home front here. We're coming off of a rather strong week. Even as Friday, we had actually ended the session lower by 0.8%, but week on week, we had risen by 5.05%. So actually, we were just paring back those gains towards the end of the week. But nevertheless, we reversed a downtrend. I'm going to pull that 1 month chart for you so you can see how actually last week was much, much better than we had seen the week prior. That's this one, just that uptrend here. That now seems to be a V-shaped recovery here, at least from the past couple of weeks. However, the not so good news in terms of last week was that the turnovers dropped by close to 41%. So that was just 9.7 billion pesos in trades. But the good news naman is that even as we were still feeling the exodus from our foreign buyers, they were net sellers. They still nevertheless eased the selling. So that went down by 63% to an average of 590 million pesos. Now, PhilStocks, however, is seeing a downward trend, especially in the upcoming trading weeks. Now, we're just, a few weeks shy to the end of this hell year, so to speak. And what might be driving that downward trend? He says that inflation print that we just had from last month, that was November, a month that was beset, of course, with typhoons and agricultural products, especially food, felt an uptick in prices, and we saw inflation quickening to a 21-month high of 3.3%. However, on the other side, BSP Governor Ben Diokno said that this impact, since of course it's supply driven from the typhoons, is likely to be largely transitory, and he does see inflation settling within the target range of 2 to 4%. But Luis Limlingan of Regina Cap is saying that all eyes will now be on the December 17 meeting of the BSP. Will there be another rate cut na naman, especially as inflation is going up? But 2Trade Asia says that this might actually be positive, because if you have lower rates and capital costs get reduced, this might have an effect on the equity space. It won't be attractive not to go look at bonds, and we might actually be switching from fixed income securities. I'm just going to take a step back and take a quick peek at the sectors here. whether you actually have some of them bearing the weight here. You can see on my terminal here, holding firms up by 0.8%, together with services that's up by 0.8%. But properties and financials, very much aligned with that inflation print and very sensitive to the interest rates, are actually the less worst performers in terms of the sectors this morning. And finally, just a quick peek at our big movers here, especially our index players. We haven't seen these in a while. You're going to be seeing Alliance Global leading the pack here. That's up by 2.8%. So it does seem to be the holding firms pulling up the weight here. AGI, you've got JG Summit, you've also got GT Capital. So these three big guns here leading the charge. But you're going to be seeing, as I mentioned earlier, on the banks as well as the property space, in particular Ayala Land bearing the brunt here. Ayala Land down by 1.5%. And we're going to have more on specific stocks as well as the markets later on in the broadcast. We've got Chinabank Securities Rastine Mercado. Now, just on to still on the topic of interest rates and the banking space, moving on from those clearer set of guidelines of the FIST, hopefully coming in by the end of the year. But you've also got guidelines on the digital banks. How does a firm now apply to become a digital bank?
Okay, quite simple rules. So when you try to take a look at the guidelines, it is in the circular released by the Banco Central. But basically the idea is that they are putting a new classification here. So normally you have the universal, the thrift, the cooperatives, and even Islamic banks. And now they're adding a new classification that is, of course, solely dedicated for a digital bank. So again, digital lenders will still be subject to prudential requirements by the BSP, especially when it comes to information and technology, as well as cybersecurity, outsourcing, and even consumer protection, and of course, anti-money laundering and even terrorism financing. Now, digital banks may actually, grant or at least have the usual bank services, granting loans and even allowing savings, usual bank services, as well as time deposits here. But the Monetary Board may actually limit the number of digital banks based on the applications that they have received. Now, on to your question here, how does a firm become a digital bank? So a number of requirements here. First off, they are required to have a minimum capital of 1 billion pesos. At the same time, the stocks of non-bank parties should actually be limited to 40% of voting stocks, whether it be Filipino or non-Filipino. Now, traditional banks as well are actually allowed to convert to a digital-only play. So what are the rules for making that transition? So they have 3 years to actually meet the minimum capital requirement of 1 billion pesos. At the same time, they have those 3 years to actually make the necessary transitions, such as the closure of branches. Now, upon approval, they have 6 months to actually phase out their activities not associated with digital banking, and that, of course, includes the closure of branches as well. And at the same time, they have to submit their amended articles of incorporation or bylaw. So again, the central bank finally at least setting a clearer guidelines here, at least when it comes to digital lenders.
All right, Jess. Now, since we're still on the topic of banks, that sector's in focus today, you've also got even more stimulus possibly coming. You've got state lenders, Land Bank, and DBP coming up with their own set of rules for how to grant interest rate subsidies, especially to LGUs. What are they requiring?
Okay, so again, this interest rate subsidy program, as you've mentioned, is actually mandated by Bayani and Tour, the Bayani Recover as One Act. Now, the thing is, both banks, both the DBP and Land Bank, have actually been allotted 1 billion pesos each for new and existing local government unit loans. So this, of course, is aimed at helping LGUs in their recovery efforts due to the pandemic. Now, Vivian Canonero, she is a Land Bank's Vice President for Corporate Affairs. She said that this program may actually be used for permanent working capital. So, for example, the purchase of agricultural produce, at the same time for acquiring equipment and the construction of facilities as well. Now, the local governments will actually be given a fixed interest rate of 4% until 2022, of which 2% will be subsidized by the government. But the subsidy will actually be capped for every local government borrower again. So that means, of course, it's going to be on a first come, first served basis. The Land Bank is allocating a maximum of 10 million pesos for provinces and at the same time 5 million pesos for municipalities. But then LGUs are still free to borrow as much as they can, depending on their net borrowing capacity to be determined by the Bureau of Treasury for local governments. At the same time, according to Land Bank here, the 1 billion peso allotment that they have can actually cover a total of 50 billion pesos of loans for LGU. So there you have it, both Land Bank and DBP at least setting clear guidelines here when it comes to their interest rate subsidy program.
Okay, so we've also got the Bangko Sentral, keen on helping our banks and our financiers stay stable here. Just a quick check on our yield curve. If you want to invest in our government for the next 10 years, you could expect a quite low interest rate for the moment. That's at around 3.1%, Jess. Now, we'll have more on the news when Business World Live returns. Do stay with us.
Good morning. You're still watching Business World Live. I'm Delos Santos. The Philippine Economic Zone Authority, or PEZA, has its eyes set on transforming economic zones into townships. PEZA said the move aims to make such zones the economic drivers of their respective cities with the integration of work, commerce, and residential areas. A key demand among industrial locators is improved logistics, which are currently concentrated in the National Capital Region. Real estate advisory firm Prime Philippines, on the other hand, expects the Cavite-Laguna-Batangas corridor to maintain its position as a production center in Luzon. At the same time, it sees North Luzon as a growing industrial hub. PEZA said the Philippines' incentives need to remain competitive if it were to retain and attract more locators. PEZA Director General Charito Plaza said changes are bound to happen once the CREATE bill gets signed into law. Now, budget support for government corporations was down 13% year-on-year in October, with the National Irrigation Administration receiving the largest subsidy. The Bureau of Treasury reported 6.3 billion pesos worth of subsidies which have been issued to state-run companies in October. Next to the National Irrigation Authority, the National Electrification Administration received 885 million pesos in government subsidies. This is followed by the National Housing Authority, the Philippine Postal Corporation, and the Philippine Heart Center. Other state-owned firms that received financial support include economic zones and health centers. The Social Security System, or SSS, received the largest subsidy year to date at 51 billion pesos after it acted as the implementing agency in the government's wage subsidy program for companies.
More than 12,000 sitios in the country still do not have access to electricity. This is according to the National Electrification Administration, that is now calling for additional funding as next year's budget for electrification projects is only enough to cover 1,000 sitios. Now, under the 2021 spending plan, only 1.6 billion pesos is allocated for electrification projects in sitios. NEA Administrator Edgardo Masungsong said such projects need a much bigger allocation. That's if the government is still aiming to meet its 100% electrification target. Now, to reach this target by 2022, Masungsong proposed ways to raise more funds, like availing of foreign grants and donations, using internally generated funds of electric cooperatives, and entering into a qualified third-party agreement. They said under the qualified third-party program, electric cooperatives can waive a part of their unviable areas to qualified private investors. Now, if there were no takers, the National Power Corporation, or NAPOCOR, can implement these projects through missionary electrification. Investors pulled equally in two different directions. We have with us Chinabank Securities Rastine Mercado to share which way he thinks equities will be going this week. Good morning, Rastine, and welcome back.
Morning, Danie. Thanks.
Okay, Racine, let's talk about the direction here. 7,000 has proven to be a rather strong psychological level here. We've already gone through the euphoria, so to speak, of global markets enjoying that vaccine news, but we've also digested so much economic news in the past week. Particularly, you've got inflation there, you've got the damages from the past typhoons in November, and we're still nevertheless doing well, at least month on month here. Tell us, what is there to look forward to, or is this rally already fully valued?
Well, I think that the market has already risen considerably, and some have already voiced out their concerns that this might have been too fast, too soon. In terms of valuations, your index is now trading at around 26 times your expected 2020 earnings, and that will moderate to just around 18.9 times in 2021. So in terms of your 5-year average, that obviously is still higher than the 17.8 times forward earnings. So that kind of gives us an idea that this rally might encounter resistance more heavily at this point. I think 7,200 at this point is actually really strong, and there is a slight bearish bias for the market, at least over the next few weeks, as we kind of see some consolidation happening or occurring, especially since the pent-up optimism from the vaccine developments kind of fizzles out. Uh, so hopefully we do see that moderation in prices. So if our growth prospects for next year continue to materialize, then that should be good for long-term investors. So if prices pull back, then that provides an opportunity for investors to increase their positions in the market.
Is there sentiment that, at least from a structural perspective and from a stimulus perspective, things are moving in the right direction, and there's less uncertainty at least?
Well, I think if we go back to mid-year this year, a lot of the stimulus measures that were being tackled in Congress are now nearing semblance of completion with I think FIST and CREATE and your national budget actually in the pipe for enactment soon. So well, I think for one, CREATE has been major uncertainty over the past few years, right? From when it was
Right.
Itira. So having that passed is already one positive catalyst in itself, right?
Okay.
And it comes at a time where it will kind of incentivize your corporates to kind of to give them some tax savings for them to deploy as capex and probably to help contribute towards easing unemployment rates, right? So that generates more jobs. So technically, in terms of economic activity, that should be a net positive for us. So in terms of your FIST bill that has currently hurdled the Bicam, that should provide additional liquidity, at least for banks, because that could be unlocked, that could be used for lending, right? So, but that how that uh, interplays with the tighter lending standards we currently have is going to, and as well as the confidence from consumers to take up loans, businesses to take up loans, that will ultimately lead to that will ultimately determine what the cost in terms of growth, the economic activity that we could be seeing generate from those, right? So ultimately, if we see a recovery in demand, better consumer and business confidence, then that should contribute to a pickup in demand for lending as well. So that should be net good for the economy. So it's in terms of structural backbone, I think we're in a much better place now than where we were a few months ago. So hopefully we do get to use these measures and hopefully realize the expectations that we're currently pricing in now.
Okay, so it's there, but then we still need that confidence to spend to
Yeah.
actually tap into those structural reforms. Tell
Mhm.
us, which sectors or stocks in particular do you feel would most benefit from the faster, so to speak, approval or accelerated approval of these bills. In particular, you're mentioning already Create and Sitira, and a lot had, there was a lot of contention there, because it might actually be negative for the manufacturing space. Has that changed now? And are you actually seeing specific sectors in the or industries that might now benefit simply because it's now approved?
Well, I think in terms of create that concern on the manufacturing side of things, that sector, the outsourcing sector, there has been a considerable movements in terms of what incentives will be given in terms of the sunset provision. So that's a good development, right? But in terms of sectors in general, I think since you lower your corporate income tax rate, right, so that should be a benefit for all your corporates. So I think it's just a matter of how prospects for businesses will be over the next over the coming years. So again, we go back to that notion that really the economic recovery will be ultimately driven by a recovery in consumer demand. So given that our sector preferences still remain, your retailers of consumer staples, so that's your Pure Gold, your RHIs, those have actually lagged over the past few months. So
Okay.
we might see those kind of recover in terms of prices over the next few weeks, hopefully, if we see a rotation in those issues. And then
Mhm.
apart from that, you see the construction materials sector probably finding some space to move higher because of the
Okay.
expected increase in infrastructure projects next year. So, but I mean, like those are just I think at this point something that we could start take a look at, especially in consideration of the run up in prices that we've seen
Mhm.
across the board, right? So hopefully we do get to perform much better than what we're currently expecting, and
Mhm.
hopefully we do get to I think the ultimate caveat really is that the pandemic remains under control, right? So hopefully we do get that vaccine in and widespread inoculation occurs, because if we remove that uncertainty or headwind in 2021, then that should ultimately really boost confidence both from consumers and investors alike.
You were talking about the valuations being exceptionally high, at least for our
Mm.
index here. Tell us, how does that compare with the rest of the global movements, which have also been in a bullish run? Why are we still seeing foreigners selling out, especially since other stocks have also been quite expensive at the moment?
Well, I think if you look at it in terms of relative attractiveness, the Philippines really has lagged over the past few months, actually the whole year, because of War One. You do see that we are lagging in terms of fiscal stimulus. So that has been a concern, and that has been something that was underscored by the IMF, that is important in order for recovery to materialize significantly over the next few years, right? So it could be a function of that. And I think really in terms of just pricing in the recovery, I think we just really saw that coming in the last few weeks of October and into November, whereas other markets have actually seen that already ever since mid-year, right? So
Mm.
again, the concern now is that in terms of global markets, for example, the US, where you see this rise in new cases, and it's actually supposed to be spurring some concerns, right? And but that's against the backdrop of potential rollout of a vaccine. So I think now it's more of a wait and see approach that investors are currently adopting, at least for the U.S. markets, and I think for the Philippine market as well. And then how developments will occur over the next few weeks if the rollout indeed becomes full force over the next few weeks, the next few months, then that could kind of just support prices at current levels, right? So
Mhm.
if we are expecting kind of a return to pre-pandemic levels around 2022. I think in terms of consensus expectations, that so for this year, the decline in earnings for year PACI constituents around 40% in terms of consensus estimates. For 2021, a recovery of 40% is also seen, right? So
Mhm.
for us to go back to 2019 levels, we need to see a 20% growth year on year between 2022 and 2021 for us to get back that level. So if we do get back uh, to if we do kind of see things moving towards that direction, that there is growth in store, then there's a possibility that the market might actually move ahead those expectations and move prices back to where they were around 2019. But then again, that remains riddled with a lot of uncertainty, especially since we have a full year ahead of us. So hopefully, again, less headwinds, more tailwinds, and really just delivering on expectations is going to be crucial. So hopefully, that also helps ramp up the confidence from foreign funds.
Okay, so but nevertheless, it's still a couple of years from now. If that does happen, it's not going to be 2021. Rastine, last question here, especially on the telco stocks. You had mentioned that the pure gold used to be the shining star of the pandemic. Now it's still in the leaderboard, but not nevertheless number one. The same goes for telcos. At least abroad, also there was already a shift from those Nasdaq tech stocks, for example. Are you still seeing some upside here, especially since they've already been rallying this year? And what are your considerations when it comes to the new players? You've got Dito Telecom already testing the waters here. They're going to be launching on January as planned. And you've got Nokia now also partnering, Now Corporation rather, now also partnering with Nokia. So how does this move the needle in terms of our incumbents?
Well, I guess in any high growth space, you do see an emergence of more competition, right? So, given that the environment for telcos is going to be competitive over the next few months, actually into next year, then it means that the space is actually growing. So, in terms of your underlying demand, obviously, since it's telco, it's a necessity. A lot of people working from home, distance learning arrangements, so their services will remain in demand, right? So, it's just a matter of delivering on the improvements and services that they are looking to implement, right? So again, one consideration is the regulatory uncertainty around telcos. As we know that the government is actually looking at them to improve their services, right? So that has been delivered to SONA earlier this year. So hopefully we do get to see that. And with your new players coming in, it's always going to be a matter of how well their technology is and how consumers will feel about their services, right? So ultimately, it's going to be their demand that will underpin the profitability potential of these firms. So hopefully, given that space, I think across the board at least, we should see some improvements.
Okay, so you have the space to play here, but it's really up to the players to take advantage of that. But there are, of course, those regulatory issues still on the table. Thank you so much for those insights. That was Chinabank Securities' Rastine Mercado.
Thanks for having me.
And that's a first look into the business day. Today is Monday, December 7. I'm Danie, Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Jess Delos Santos. We are One News.
Morning. Justine, good morning. Happy Monday.
Morning po.
Yaw! Pabasa ako nung may clues. Kaya pa ba? Kaya pa ba? Hindi na.